Hello, welcome to the Hurst Trading Room. This is our video update for the 3rd of June 2013. Before we take a look at the markets, please make sure that you have read and understood these disclaimers. Let's start off by taking a look at our currently open positions and what we're doing to monitor them. First of all, of course, we have a short position in the S&P 500. And as I mentioned in last week's video, I was not surprised to see price come back up to the FLD as it did over here last week on, I think that was Tuesday last week. Of course, the markets in the US were closed on Monday, but there was a little bit of overnight trading, which is that very small bar over there. So on Tuesday, the markets came back up to the FLD, and as I mentioned in last week's video, I was going to watch and see how the market moved towards the FLD, and in fact, as it happened, it moved up to the FLD and immediately dropped down again, and then spent the rest of the week below the FLD with a small cross above it on Thursday, and then dropped down quite hard on Friday. And so that is not really the action that we expect as the market moves into an E category trade. Of course, we are now in a short D category trade as the market comes down and forms this 40-day cycle trough. Now there you can see the very staggered nest of lows. It's very staggered because those cycles are all running a bit longer than they are expected to run, and there is no evidence that the trough has yet occurred. Now it's an interesting situation because this 40-day cycle trough, let me just clear that, might have occurred over here. That was just over a week ago, about 10 days ago, on the 23rd of May. That 40-day cycle trough might have occurred then, in which case the move back up to the FLD would, strictly speaking, have been our E category interaction. As you can see, it was a very disappointing E category interaction, if that is what it was, because price came up to the FLD, touched it or crossed it, and went very little beyond that FLD, and then came down again. Now that doesn't mean that it is not an E category interaction. It could be. If it is an E category interaction, then that means that this market has turned very bearish. Okay, that is a very bearish looking E category interaction. Of course, the other thing that might be happening is that that is not the E category interaction at all, and that the 40-day cycle trough has not yet formed in the market, or possibly it formed last week on Friday. And here you can see the bar count, 46 bars. So Friday last week would have been 3 bars less, so that's 43 bars. So it's not impossible that the 40-day cycle trough formed last week on Friday at 43 bars or 43 days. Now, I say it's not impossible, but it is not really what we expect. We have had a very good bull run, as you know, in the US markets. You can see here this straight upwards move, and under those conditions, you would expect a 40-day cycle trough to occur early, because clearly there is something that is moving the market strongly upwards. Whether it's a dominant cycle, whether it's the beginning of the emergence of a pseudo trend, although I think that's less likely now, but certainly if there's a dominant cycle pulling the market upwards, then you would expect the 40-day cycle trough to occur early. And so for it to occur at 43 bars is slightly unexpected, unless that dominant cycle has turned down and we are now in the bearish phase of that dominant cycle, which is certainly very possible. So even if that 40-day cycle trough only occurred last week Friday, although the trough was late, it also tells us that the market has shifted and is now in a very bearish situation. And so what are we doing to monitor this trade? Well, of course, you can see here our exits. Let me clear this again. You can see our T1 exit, and ironically, the market came to within a few ticks of our T1 exit. And in fact, today it dropped to literally one tick away from that T1 exit. But the T1 exit hasn't actually been effected. Our order hasn't happened. And here is our T2 exit. And here is our stop loss. Now you'll notice that stop loss is not at the level of the initial stop loss, as it should be, strictly according to the rules. Why is that? Well, as I mentioned in last week's video, as the market came back up to the FLD, I was going to watch it closely. And after it formed that high on Tuesday, I moved my stop loss down to the level of that high. Because if the market continued to move upwards beyond that point, then I wanted to be out of the market, because clearly we were then in an E category long trading opportunity, and we shouldn't still be in a short trade. Of course, the market didn't. It fell, and I have left my stop loss at that level over there, and I'm going to watch it again closely this week, because this behavior where the price comes back to the FLD, although we know that the FLD is a very powerful line, and we know that price often comes back to the FLD, what it's done since then in terms of pretty much tracking along the FLD and then dropping down below is not typical price and FLD interaction. So we need to be a little bit cautious. When there are dominant cycles moving the market strongly in one direction or the other, very often the interaction between price and the FLD becomes distorted and becomes less simple to trade on the basis of. So we need to be very cautious. And so if price comes back up to this FLD, then I would certainly consider exiting this trade, because it would seem likely that the 40-day cycle trough has occurred late. And later on in the video, I'm going to speak about whether I would enter into a long E category trade at that level. There are various things to consider in terms of effecting an entry there. Let's take a look at the short trade that we have in the Nasdaq. Now the situation, as you can see, is very similar in the Nasdaq. I entered into a short trade on the assumption that the market was coming down into the 40-day cycle trough. But you will notice that in the analysis, that 40-day cycle trough has been placed by Sentient Trader. Now some people worry tremendously about when Sentient Trader actually places that trough, and there are various factors that Sentient Trader takes into consideration, largely to do with the breakdown of the shorter cycles and the price action that has happened since then, whether it looks fairly obvious that that particular trough has occurred. I won't go into details here about it, but I don't put a tremendous amount of emphasis on whether that trough has been found to have occurred or not. Yes, Sentient Trader has its reasons for placing this trough here, and so yes, it is very likely or very possible that that trough did in fact occur over there. But it's also not impossible that the trough hasn't quite occurred yet. You'll see there have been also 46 bars since the 20-week cycle trough, which occurred in the middle of April. And so it's not impossible that that 40-day cycle trough hasn't occurred yet. But I'm very happy to go with the assumption that Sentient Trader has made that the 40-day cycle trough has occurred. How does that affect our trade? Well, in fact, that means that our current trading opportunity, which is a D category short trading opportunity, is in fact over, because that D category short trading opportunity is the opportunity that we get when price crosses below the FLD on the way down to the 40-day cycle trough. So if the 40-day cycle trough is formed, then our opportunity is over. And in fact, the click-to-trade plugin in Sentient Trader issued exit orders, or asked me whether I would like to issue exit orders, because it worked out for itself that that trading opportunity was complete. And it issued exit orders at pretty much a break-even level for me on Thursday. I chose not to accept those exit orders, because I thought that there was still the strong potential of further downside price action. Of course, on Friday we saw a little bit of downside action, but today, of course, price is bouncing back up again. So it looks like I possibly should have accepted those exit orders. But as I've mentioned previously with regard to this particular trade, I'm not taking very much risk on this trade, as I have entered fairly small positions, so I'm not taking very much risk on it, and I'm happy to let it play out. What I have done, as you can see, if I clear the chart a little bit, what I have done is I have lowered the stop loss for this trade to the level of last week Thursday's high over there, and so I have reduced the risk even further. I believe that the markets might well be preparing for some very strong bearish action. Okay, we've seen this protracted upwards move over here, and that is because there is a dominant cycle that has been pulling the markets upwards. I suspect that the dominant cycle has turned or is in the process of turning, so I think we are going to see some strong downwards action. And for that reason, I'm not exiting from this trade simply because prices come back up to the level of the FLD. And as you can see, what's actually been happening is that price has pretty much been tracking along the FLD in the past over a week, perhaps about 10 days. There have been only 2 days in which the price did not actually touch the FLD. Last week, Monday, which wasn't really a trading day, and last week, Wednesday. They were the only 2 days the price didn't straddle this FLD. And so price is currently in the process of tracking along the FLD. When price is tracking along the FLD, you cannot exit or enter a trade at the level of the FLD because price is tracking along it. And so I'm maintaining my open D category short position, and that's the status for my trading at the moment. The markets are interesting at the moment because, of course, they've had a dominant cycle pulling them very strongly, and so it's a situation where we are bending the rules slightly. An important aspect of the FLD trading strategy is that there are very, very clear guidelines about how you should trade. But at the end of the day, you have to apply your own understanding of what's happening in the market and your own experience in terms of actually implementing the trading strategy. And this is one of those situations. So I have set a stop on this short trade. If price bounces up to there, then I will exit from this trade. And a little later in the video, I'll speak about whether I'm going to consider entering into a long E category trading opportunity next. Let's take a look at our forex pairs. Let's start off with the euro to US dollar. Now, the euro to US dollar also did something interesting. It did something to fool us, perhaps, although I like to think that the markets have a bit of a sense of humor, and you have to approach markets with an understanding that when price interacts with the FLD, it's not always absolutely clear-cut. We've seen some very clear-cut interactions recently in the euro to US dollar, and particularly in the British pound to US dollar, but that's not always the case. And as I mentioned in last week's video, I had entered into a long trade, and this is a long E category trade. I entered into it at that level over there. I entered fairly high up into the move, as you can see. And I spoke in last week's video at some length about the fact that quite possibly this FLD should be displaced by 3 or 4 days. And so, in fact, the FLD that we should be using for our trading decisions should be this displaced FLD, and I demonstrated in last week's video how to draw it and so on. And so last week I was watching that displaced FLD very closely, and the market did a really interesting thing. It, of course, having affected our entry on the previous Thursday, it fell down sharply, but didn't drop below the level of our initial stop loss, which was down there. And then it bounced back up to the FLD. Then it crossed above it in a very half-hearted manner, and then over the weekend didn't really move anywhere. And then early last week it dropped down to the FLD. And in fact, I'm going to zoom in here because there's a very important point to be made about the way in which price interacts with the FLD. I mentioned last week that, of course, we should possibly be displacing this FLD, which is an advanced concept. And if you haven't reached that part of the FLD trading strategy course, then by all means you should not be displacing the FLD. It's very much an advanced concept. But when price came down, and at the end of trading on Tuesday, it had come down to the FLD, and look at that, it came right down to it. It popped just a little bit below it, and then closed right at the level of the FLD. When price does that, I see that as a sign that it is probably finding support at the FLD. Okay, you will often see price coming to the FLD and you know, just sitting there, and it finds support. So you have to be very careful about immediately jumping out of your trade because it has come down to the FLD. And you have to give it just a little bit of room to play, which I did on the Wednesday, and it dropped a tiny little bit further. But of course our initial stop loss at this point was still down here. Okay, so it was still well above our initial stop loss, and that's why we place the initial stop loss, because if the market's doing something that you're not sure about in terms of the FLD, then you must just rely on your initial stop loss. If it comes down to the initial stop loss, you know the trade is over. If it comes down to the FLD, as it did last week on Tuesday, and you know, ends the price action right at the level of the FLD, then you should certainly not be jumping out of the market. Okay, it's doing something that it often does. It comes back to that FLD. We saw it in the US markets last week. It rose back up to the FLD, went a little bit beyond it, and then came down again. The FLD is a very powerful line, and it acts like a magnet, draws price towards it. Sometimes price bounces a little bit beyond it, but you have to watch the interaction between price and the FLD, and give it a little bit of room to play sometimes. And so interestingly, of course, price avoided crossing the displaced FLD. It eventually did cross the displaced FLD last week on Wednesday. And as you can see, the level at which it crossed that displaced FLD was at about that level over there. The market bounced up really strongly. And on the Thursday, it reached the T1 target, which was over there. Now, interestingly, my T2 target had also been reduced, had been brought down to the T1 target level. You know, from module 5, I think we talk about adjusting the T2 target. You know that you have to adjust the T2 target according to the level at which the FLD was crossed with the benefit of hindsight. When you enter into a trade, you don't necessarily know the level at which the FLD will turn out to have been crossed by median price, because remember, of course, we are basing all of this on median price. Let me just show you that median price. There is the median price, and so as you can see, price actually crossed the FLD at that level over there, and our entry level, our entry price, was up here. Okay, so our T2 target was, of course, brought down quite a lot by the fact that, in fact, the median price crossed the FLD much lower than originally anticipated. And so, therefore, I adjusted my T2 target according to the guidelines laid out in the FLD trading strategy. And if we go back to our candlesticks, there we go. My T2 target was reduced to the level of the T1 target, and so they were both over here, T1 and T2. So I exited from both my trade 1 and trade 2 at that level. I made a small profit from both of those trades. Then the market did something really interesting and fairly frustrating, because on Friday it, as you can see, had a really strong downwards day, and it dropped right down below our entry level. And so our trade 3, our T3, was exited there at the entry level. So our trade 3 was exited at a break-even level. And so from this E category, this is an E category long trading opportunity. From this E category long trading opportunity, I made a small profit from our trade 1 and a small profit from our trade 2 and no profit from our trade 3. But nevertheless, it was a profitable trading opportunity. And it's a good example of how the guidelines of the FLD trading strategy are structured in the way that they are. Because the markets sometimes just do things that almost seem to be, done especially just to take you out of your trades. And that's why we have our 3 trades, because the markets sometimes behave fairly unusually. And that's what happened in the Euro US dollar last week, on Friday, coming down very strongly. As a matter of interest, Friday turned out to be an inside bar. Can you see that? Thursday's high was above Friday's high, and Thursday's low was below Friday's low. So in fact, Friday was an inside bar. So there was lots of drama, but nothing really happened. Of course, today the market is bouncing back up again, but one should never have regrets. If we had our trade 3 open, we'd be making a small profit out of it, but it's too late. That trading opportunity is over. Let's take a look at the British pound to US dollar. Now, the British pound to US dollar, last week, of course, we were still in our remaining trade 3 from our very profitable, we were in a short F category trading opportunity, which we entered in a displaced manner after price had crossed below the 20-day FLD. And there you can see our entry level was down here. That was our entry price for that short F category trading opportunity. Our T1 and T2 targets were taken out way back about 3 weeks ago, T1 and T2, and we had an open trade 3, which made a good deal of money for us. It just kept making money, and we exited from that trade 3 at the level of the 3-bar trailing stop, which was, I believe, at the high of that bar over there. So we exited from our trade 3 of our F category short trading opportunity last week, and as mentioned in last week's video, I was standing by to enter into an A category long trading opportunity as price crossed above the FLD, and that was, of course, as price bounced out of the expected 80-day cycle trough, and that is exactly what seems to have happened. Last week on Wednesday, price dipped down to a slightly new or slightly lower low over here, and so that is a very likely trough of the 80-day cycle. And the FLD, as you can see, in fact, let's zoom in and go through it in a little more detail. There we go. The FLD, of course, was over here, and so it dropped down below the low of the previous bar over there. Now, because, as you know, you have to be careful of the fact that you might have a double GH interaction, although, as mentioned in last week's video, I didn't think that was likely. I thought it would pay to be a little bit cautious. So in fact, I set my entry not at the level of the previous day's high, but at the level of Monday's high, which, as you can see, was over there. And so there is our entry price. And so, of course, that has proved to be a slightly displaced entry as well. One often does make displaced entries. Let's quickly take a look at that median chart and see where price actually did cross the FLD. There you can see it. The median price actually crossed the FLD over there. So that's my crossing point. And of course, here is my entry point, entry price. Okay, so we have a displaced entry in this trade as well. And as you can see, if we go back to our candlesticks, our T1 exit was reached. In fact, it was reached on the bar of entry. It was right up here, somewhere near the high of that bar of entry. That was our T1 exit. There's our entry price. Here was our initial stop loss way down there. And our T2 target was, in fact, reached earlier today. And so we exited from our trade 2. So we've taken a good deal of profit from this trade already. Our T1 profit, our trade 1 profit, and our T2 trade 2 profit. And so now, again, we're in the situation where we only have our trade 3 open. And that trade 3 is currently in a profit. As you can see, our stop loss on this open trade has been moved up to the level of entry. So the worst that can happen to our trade 3 is we exit at a break-even level, and we will be implementing the 3-bar trailing stop. Thank you for joining me for this summary of the current trading activity in the Hurst Trading Room. In the full video, I take a look at the analysis in each of the instruments and identify upcoming trading opportunities in those instruments. Thank you for your time and for your interest in Hurst cycles.